Hello and welcome. Before we start, please subscribe to our YouTube channel for news and updates. The stock market has become increasingly jittery, with the S&P 500 experiencing its first 5% pullback of the year. In uncertain market environments such as these, investors should remember that short-term market declines are a natural part of investing. Rather than following daily market movements, what perspectives should investors consider to stay focused on the long run? Oil prices have risen, but remain below their historic peaks. First, of the many factors driving markets today, perhaps the most uncertain is the impact geopolitical conflicts could have on the price of oil. Russia's invasion of Ukraine in early 2022 led to a spike in oil prices to over $127 a barrel. Oil prices did eventually settle, and have been relatively calm in recent weeks, amid rising tensions between Israel and Iran, as well as shipping disruptions in the Red Sea. Thus, oil remains a wild card when it comes to monetary policy and the timing of the Fed's first rate cut. The U.S. is the largest producer of crude oil in the world. Second, an important difference between today's inflationary environment and that of the 1970s and early 1980s is that the U.S. is now the largest producer of both oil and gas in the world. The U.S. has produced more crude oil than any other nation over the past few years. That said, the U.S. is still dependent on oil imports for a variety of reasons, including the type and quality of crude oil. Although the U.S. theoretically produces enough oil to meet its energy needs, overseas oil is often cheaper than domestically produced crude due to a variety of other factors. Since oil is a global commodity, price swings still impact U.S. producers and consumers despite strong U.S. oil production and strong trading partners. The energy sector has performed well this year. Finally, from an investment perspective, the energy sector is a volatile but important component of a diversified portfolio. During the 2022 bear market caused by inflation and recession fears, rising oil prices propelled the energy sector to a total return of 65.7%, adding to its significant gain in 2021. This year, the energy sector has generated a total return of 14.5% and is now the best performing sector. While there is no guarantee that the energy sector will always perform well during periods of geopolitical uncertainty, it remains an important part of a balanced portfolio that can help investors to weather volatility and stay focused on long-term financial goals. The bottom line? Geopolitical instability can drive up oil prices and spur inflation, muddying the economic and interest rate outlook. Investors should continue to stay invested and focused on long-run trends. Thank you for listening. For additional information, please visit mraadvisory.com.